Right now, the IRS is sitting on money that belongs to American seniors. Not because of an audit, not because of a dispute, not because of anything you did wrong. For one reason only. The form required to claim it was never filed. The average unclaimed amount among seniors who qualify but never file is $4,873. The IRS does not mail you a check. The IRS does not call. The system simply waits, and if you don't file the right form inside a 3-year window, the money is gone permanently. I'm David Harper, a state bar licensed estate attorney. For more than 15 years, I've worked with retirees navigating exactly this kind of gap, money they were legally owed that quietly expired because nobody told them which form to file. Today, I'm going to show you the 4 primary sources of unclaimed refund money for seniors, the exact forms, who qualifies, and the precise steps to claim each one. Stay to the end because I'll also cover the free filing options that make every one of these claims completely cost-free for most seniors watching. 2 groups about to walk away from their own money. Before we go further, I need to address 2 groups of people who are already forming an objection, because both are about to lose money for exactly the wrong reason. The first group files every year with a preparer or software and assumes, if a refund were sitting there, my preparer would have caught it. That confidence is understandable and very frequently wrong. Tax preparers in high-volume retail settings push through hundreds of returns a season. They apply standard deductions, standard credits, standard forms. The specific elections that capture refundable credits available only to seniors, especially tied to provisions that only became effective in the 2025 tax year, require knowledge many preparers simply never updated. You paid them, and they still left your money on the table. The second group doesn't file at all. Because their income is mostly Social Security, they believe they're under the filing threshold, and they figure there's nothing to gain. That single belief costs this group more money than anyone else. Refundable credits do not require any tax liability to produce a refund. You can owe 0 federal income tax and still receive a check from the IRS if you file the correct form. Why the IRS holds the money instead of sending it? The IRS processes tax returns. It does not proactively calculate what you'd be owed if you had filed differently, or if you had filed at all. Its job is to process refunds that are claimed. That word, claimed, is everything. No form comes in, no money goes out. The cash sits there with your name on it, quietly, indefinitely, until the 3-year window closes and it reverts to the federal treasury forever. And here's why 2025 and 2026 are the make or break years. The 3-year window to amend a return or file a late one is a hard deadline, not a soft guideline, a wall. A senior who qualified for a refundable credit in tax year 2022 and didn't claim it has only until the 2025 filing deadline to recover it. After that date, the window slams shut permanently. The clock is running right now, today, as you watch this. Point 1. The Earned Income Tax Credit seniors don't know they qualify for. Most people believe the Earned Income Tax Credit is only for working families with children. That understanding is about 20 years out of date. Congress eliminated the upper age limit for the EITC entirely, meaning a senior with any earned income, part-time work, consulting, or self-employment of any amount may now qualify regardless of age. For tax year 2025, the maximum EITC for a senior with no qualifying children is $632. With 1 qualifying child, it can reach $4,213. With 2 qualifying children, $6,960. A senior on Social Security who also earns $8,000 from part-time work qualifies for the EITC on that earned portion. Social Security does not count as earned income for EITC purposes, but it also does not disqualify you. If you babysit grandchildren for pay, do occasional handyman work, sell items online, or have any self-employment income, even small amounts, you likely qualify. It's claimed on Schedule EIC attached to your Form 1040. If you missed it in prior years, you can amend up to 3 prior year returns using Form 1040-X. One important catch. Investment income above $11,600 in dividends, capital gains, or interest disqualifies you regardless of earned income, which routes most comfortable retirees to the next point. Point 2. The credit for the elderly or disabled, the forgotten Schedule R. The credit for the elderly or disabled has existed in the federal tax code since 1976. It was built specifically for seniors on fixed incomes. It's claimed on Schedule R, and it is one of the least claimed credits in the entire tax code. Not because few seniors qualify, but because almost nobody, senior or preparer, ever checks Schedule R as part of a standard return. The credit is available to taxpayers 65 or older by year end. It's calculated as 15% of an initial amount, $5,000 for single filers, $7,500 for married couples filing jointly, reduced by non-taxable Social Security, pension income, and half of AGI above certain thresholds. Here's the part almost everyone misses. The new 2025 senior bonus deduction reduces your AGI, and reduced AGI shrinks the Schedule R phase-out. Seniors who previously calculated out of this credit may now calculate back into it for the first time. That is a door that just opened, and most preparers don't even know it's there. If you use software, search Schedule R manually and navigate there. If you use a preparer, ask point blank, was Schedule R included and was it calculated with the 2025 senior bonus deduction applied to my AGI? Point 3. The amended return window, recovering missed credits from prior years. Most seniors believe that once a return is filed and accepted, that year is closed forever. It is not. The IRS allows you to file an amended return using Form 1040-X for up to 3 years after the original filing deadline. An amended return can add credits, correct filing status, and claim refunds missed on the original. Form 1040-X is a straightforward 2-page form. It shows your original figures in one column, corrected figures in a second, and the difference, your refund, in a third. Paper-filed amended returns take 16 to 20 weeks. Electronically filed ones run 8 to 12 weeks. Track yours on irs.gov with the Where's My Amended Return tool. A senior who had qualifying earned income in 2022 and didn't claim the EITC has a narrow remaining window, the 2025 filing deadline. After that date, that year's refund is gone permanently. Act now or lose it. Pull your returns for 2022, 2023, and 2024. For each year, check whether Schedule E, IC, and Schedule R appear. If either is missing and you think you may have qualified, the next step costs you nothing. Point 4. The free filing options that make every claim cost-free. Many seniors assume that filing an amended return requires professional help or paid software. For the overwhelming majority of seniors, that simply isn't true. The IRS funds 2 completely free preparation programs built for exactly this situation. The first is VITA, Volunteer Income Tax Assistance, for taxpayers with income generally below $67,000, staffed by IRS-certified volunteers at libraries, community centers, and churches nationwide. The second is TCE, Tax Counseling for the Elderly, for seniors 60 and older with no income limit. The largest TCE provider is AARP TaxAid, which runs thousands of sites and does not require AARP membership. Both programs can prepare Form 1040-X amended returns at no charge. A senior who uses VITA or TCE to claim $4,873 in missed credits pays nothing for the preparation and receives the full amount. Go to irs.gov, search VITA Locator or AARP TaxAid Site Locator, enter your zip code, and book an appointment. Bring your original returns for the years you want to amend, your Social Security income statements, and any W-2 or 1099 forms showing earned income. The one question to ask your preparer before you file. If you use a paid preparer, one question instantly tells you whether they're applying the 2025 changes correctly. Did you apply the senior bonus deduction from the 2025 legislation and run Schedule R with the updated AGI to check whether I now qualify for the credit for the elderly? A preparer who can't answer specifically is quietly costing you money. A preparer who has updated their training will answer immediately and specifically. One who hasn't will look confused or give a vague answer about standard deductions. If you get a vague answer, ask to see the Schedule R worksheet from your return. You're paying for accuracy. You're entitled to specific answers. The bottom line: the IRS refund system is entirely reactive. Money flows out only when a valid claim comes in. The system does not notify you when you qualify for a credit you didn't claim. It waits. The seniors who recover this money are not the ones with the most complicated returns. They're the ones who know which forms to check and file them before the window closes. The 3-year window on 2022 returns is closing right now. Do one thing before you close this video. Pull your 2022, 2023, and 2024 returns and check whether Schedule EIC and Schedule R appear. If either is missing, call your nearest VITA or TCE site today. Send this to one senior you know, a parent, a sibling, a neighbor. Both the senior who files every year and the one who hasn't filed in years may be owed money they've never claimed. One share from you could put thousands of dollars back in someone's pocket before the deadline closes forever.